Ever wonder why interest rates rise and fall and why it feels like your pocket feels it first? Today, I'm joined by Gomolemo Basele, an economist at FNB Botswana, and welcome to the Gingerbread Podcast. Today, we'll be discussing interest rates, exchange rates, and all of this with the help of our economist. Gomolemo, how are you?
I'm great, and yourself?
I'm good. So, for those that don't really follow economics, what are interest rates?
Great. That's a very good question. So, interest rates, the easiest way to look at it is the cost of borrowing money, essentially. So, if I'm going to borrow money from you, obviously you're going to charge me a certain amount for the fact that you no longer have access to those funds.
Okay.
Does it make
Okay.
sense?
Yeah, it makes sense.
So, it's the cost or the benefit that I'm losing from having that liquidity, from having that money in my pocket to spend on something else.
Okay. And why do they change?
So they change for various reasons. I think from an economic standpoint, when you look at a country, for example, you have a central bank that has an objective has an objective to control interest rates so that they get certain outcomes. So interest rates, obviously the cost of borrowing, as we've put it, and depending on how the broader economy is performing and the objective of the central bank in terms of containing inflation, unemployment, and the likes, they they alter interest rates to get a certain behavior. So increasing interest rates, for example, makes it more expensive to borrow. And therefore the expectation is that you should borrow less, consume less, and avoid the economy from heating up. And then the opposite is also true. So when
Okay.
there's capacity, cut interest rates to try and pick up spending because now it's easier to access money for you to borrow, hopefully do productive things with those funds.
Okay, that makes sense. And then how do rising or falling interest rates affect people who are paying off student debt, mortgages, and car loans?
So they affect them in different ways. And with rising interest rates, for example, the intention is to cut down your spending. So if you've already committed yourself in terms of, like you say, a mortgage, personal loan, student loan, etc., the expectation is that if they're linked or if they're variable linked loans, for example, when interest rates increase, your installments increase. And when that happens, your consumption has to come down in other areas for you to
Oh,
offset the higher cost that you're paying on these facilities.
but that's not what really happens, right? If I have a car loan and the interest rate goes up, I'm not going to decrease how much I spend on food or rent. There are other fixed costs.
Yeah, if you have the capacity, but you'll cut down on entertainment, for example, or that is the expectation for you to then service the higher installments. So you have to instead of going home, for example, every holiday, you might just choose to go once or twice a year. So the expectation
Okay.
is that you do have to make adjustments for the higher cost of borrowing.
Okay. You mentioned something interesting earlier. You said there are variable rates.
Yeah.
So there's like a fixed interest rate that doesn't change.
There is. So you can access some facilities that have a fixed interest rate over the entire duration of the facility. So when interest rates go up and down, you're not affected. But usually with these fixed rate loans, the interest rate at the start is usually higher than what you're likely to see if you're taking a variable interest rate loan.
Okay. Okay, that makes sense. So, what should young professionals consider before taking out an interest? Before taking out a loan?
So they have to consider a few things, I'd say. Obviously, objectives in life and also their stages in life. So if you're a young professional, at what phase of your career are you at? And depending on that phase, sort of what are your needs? So if you're mid-career, for example, looking to build a family, then likely a home is where you're focusing. And then you go obviously shopping around to see where you can get a facility that best fits your capacity. Let me say it that way.
Okay.
But and then if you're younger, I'm guessing that the focus will be getting vehicle asset finance or a personal loan to finance a vehicle just to improve your mobility.
Okay. But now, looking at the interest rates and what you need to consider, do you think that this is a good time to take out a loan?
Well, if you look at where interest rates or the policy rate, so what Bank of Botswana actually sets as the monetary policy rate, and the trajectory it's taken over the last 2 or so years, the trend has been downwards. So interest rates have been getting cut, but more recently, I think it's becoming more expensive, and not necessarily
Yeah.
just because of what the central bank has done, but because banks also adjusted their pricing given the current economic conditions. So I would say it's getting more expensive to borrow right now, or it's gotten more expensive to borrow, given the changes that commercial banks have done, increasing their prime rates by between 75 and 200 basis points.
Oh,
So if you had borrowed a year ago, it would have been cheaper than it is now.
so is it better to borrow now because it might be more expensive in the future, or just hold off on taking loans right now
It's it's
if you
it,
can afford to?
it's a bit of a tricky one. So I think just looking at borrowing just based on interest rates might not be the best way to look at it right now, because there's bigger things happening in the economy. I mean, and I'm sure you've talked about this, about what's happening within mining and the impact that it's had on other sectors. The government has also come out to say, because of poor sales in the diamond sector, the the fiscus is also under pressure. So the economy generally is under pressure, and with mining contracting, other sectors also feeling the pinch. The outlook is for higher unemployment. So if if this then obviously spills over to whatever industry you're working in, it might also put a bit of pressure on your employer to right size, and that might not necessarily point to it being the right time to borrow right now, if I can just put it that way. To be honest,
Sounds a bit scary.
no, I
Guys,
think
please check your industries.
I'm not trying to make it scary, but I think in times of stress, you have to take more of a defensive strategy than trying to um, take on facilities that you don't need right now.
Okay. Okay. On the flip side, onto happier things. Um, how are these interest rates affecting savings? Like if you have a savings account or investments?
So it should be positive. Obviously, um, with prime lending rates increasing, some savings products are linked to prime, so they feel that positive uplift. But what we also have seen traditionally is that not all of the positive increases in interest rates actually filter through to savings products. But you might find that not just from a banking standpoint, other sectors offer quite compelling savings products. So money markets, for example, you may look at asset managers and what kind of yields they're able to attract from some of these products. So there are other ways, yeah, to try and secure whatever wealth you have and to try and grow it.
Okay. So if I have a little bit extra money right now, it would be a good idea to put it in savings or put it in investments.
Put it in investments, yeah, or savings.
Okay. Hey, at least there's hope here.
There's always hope. Yeah, there's always hope. I like to think of it that way.
Okay, that's interesting. And then, whilst we're still speaking about interest rates, what practical tips do you have for people to manage debt?
Don't take on more than what you need. I think is a key one, and also use whatever that you raise for the initial purpose that you raised it for. So make sure it has a definite purpose and you stick to that purpose. So you go take a personal loan to try and fix something around your home. Use it for that. There's always a bit of spillage, I understand, but try and maintain the discipline to ensure that you match whatever debt you raise with the objective that you raised it for, not just to finance consumptive spending, for example. Don't take debt to go on holiday.
Okay, and then asking for myself, when you said you should only take on as much debt as you need, how much is people need money for so many things, but what's a safe amount to take? Would it be like 20% of my income should be debt based or like a max of? Because some people use more than 50% of their salary just paying off loans, paying off mortgage, paying off. So what's a safe?
I don't want to
Is there a
prescribe.
percentage
I don't want to
or like
prescribe.
between this and that?
I don't want to prescribe a certain percentage, but I would say 30 to 40% is yeah.
That's like a max.
That's quite a lot of debt. Okay, so
Yeah.
so I think, yeah, staying around somewhere there to avoid instances of saying you use half your salary to pay off debt. I mean, it leaves you very little room for any emergency if there ever is one. Touch wood. But yeah, the less debt you have, the better, so that when you do actually need it for something urgent, you have that capacity to take on more.
Okay. And then when you're talking about debt, right, you don't just mean what we borrow from the banks? You mean what we borrow from Stockville, what we borrow from our
Yeah.
friends?
Yeah.
Because usually when it's month end, you're like, ish, I need to pay that person.
Yeah.
And you're including that in that 30
Yeah.
to 40% of debt.
Yeah, it's all encompassing. I know we often go to a bank, for example, and then they say we have this capacity. We take that on, but and then we forget all the other portions that we also pick up from all these other avenues. Going to a microfinancer, a Stockville or a pawn shop. All of that actually feeds into your your entire debt profile.
Okay. I know we're going a bit off topic here, but when you say high interest rates, ke akantsha Motheo.
Yeah.
So, Motheo, usually interest rates are like 25%, 30%, 40%.
Yeah.
Those aren't impacted by the Bank of Botswana. Like it's not regulated. It's a personal choice, right?
Yeah, so those are usually fixed. So even with microfinanciers, I think most of the interest rates are also fixed. But like you say, they're also quite high. I think with commercial banks, that's where you see a lot more variable interest rate loans. So yeah, there's all these things to also consider. That okay, fine, I got a cheap loan here, but and then every layer that you then go into, the interest is also different. So I think some people might just look at the nominal value of the debt, but not considering that hey,
Yeah.
that 30% will it will pinch.
Okay. No, that's interesting.
Yeah,
I
very.
think let's move on to exchange rates because as much as they're both rates, they're very different. So what's an exchange rate?
So an exchange rate, I think, yeah, it's almost in the the definition. So it's the amount of pula, for example, that I would need to give you for you to give me another currency, like a dollar or
Okay.
rands or that. So it's the rate at which, or yeah, literally the amount of pula I need to give you to get $1, for example. So that's the USD BWP exchange rate.
Okay.
So I need to give you, or you need, yeah, I need to give you about 13 pula to get $1 from you.
13 isn't bad.
Sure.
I don't know. I don't know much about exchange rates. But then how do these exchange rates impact Botswana's economy?
So they affect them in a few ways. I think the two key ways is looking at it from an importer as well as an exporter standpoint. So we import quite a lot of stuff as a country, a lot.
Yeah.
Food. We also import diamonds due to De Beers' regional operations, and all of that then basically determines how much we need to convert or how much of our pula we need to convert into all these other currencies to get these goods. And where that pula comes from is from our reserves. So we have a reserve of all these currencies or pula equivalent of all these currencies. And every time we buy something from outside, we essentially dip into those reserves to do it,
Okay.
right?
Yeah.
And then from an exporter standpoint, it also determines how much you're going to get for what you produce. So our key exports are diamonds. Depending on where exchange rates are, you can get a sense of how much we're going to get for the diamonds we export, as well as the smaller items as well, such as we export meat as well, how much we're going to actually receive for that. And then I think from a government standpoint, the biggest one would be from a SACU receipt standpoint. So we receive funds from the SACU revenue pool,
What's that?
which so it's a customs union that was set up for the region. So we charge a common external tariff for all trade outside of the region, right? But and then for whatever comes in is allocated into this pool and then split up according to a revenue sharing formula, but it's denominated in rands.
Okay.
So as the pula appreciates against the rand, for example, our portion will be high in value. So if for example you expect it to be static, you expect the value to be X amount, and then the only thing you vary is the currency. The value that you actually get in pula terms in the end, if the pula appreciates, will be higher. I don't know if
Okay.
that makes sense.
Yeah, it's very high level.
Sorry.
it's it's
But yeah,
it's very high
the
level.
point is
But
that exchange rate affects our imports and exports primarily, and then a lot of that is also seen through what happens to our level of reserves. So if our exports suffer, um, you tend to see the reserves also drop
okay.
because
Okay.
our imports generally remain quite high because a lot of it is food also from South Africa.
All right. That makes sense. And then bringing it back down to like everyday Botswana. How does the change in exchange rate impact everyday Botswana today?
Yeah. So any change in exchange rate, let's say for everyday Motswana. So depending on what you purchase, mainly food, a depreciation of the pula would mean that food becomes more expensive. So if the cost of doing FX increases for the importer, which is
Yeah.
usually a retailer or a distributor that then filters down to a retailer, they increase their prices essentially and feed it through to the consumer. So
Okay.
it's inflationary to a certain degree.
So if the price of the pula goes down, then the things we import become more expensive.
Exactly.
But we import everything here.
Unfortunately, I think it's a push for us to try and produce more as well.
Okay. So I think to counter that, I think Lorna growing up, we've always gone with our parents, cross the border, go to SA, buy clothes, buy not food, maybe McDonald's,
Jesus.
maybe McDonald's, but not food. So we buy clothes, we buy whatever
Yeah.
in SA because we've always been stronger than the rand. So how would the exchange rates now affect that buying?
So the pula is still value slightly higher than the rand. So it's not. Yeah, we have. I think it's about what 1.22 if you actually go to market. So you still get more value than if you were in South Africa, for example. Um, you just get slightly less than what you used to because of recent changes that were made to the currency.
The devaluation.
Uh, the de facto devaluation, yeah.
I mean, there are a lot of things that affect the exchange rate, right?
Yeah.
It's not just the devaluation. So, with it being at 1.22 or 1.25, etc., do you think it's still worth it that Botswana go on weekends, ra Rustenburg, ra Mahikeng, and we go buy clothes, etc., etc., considering the fact that you have to pour fuel, you have to get lunch? Do you think it's still worth that saving in exchange rates?
I'm I'm not sure how much the saving actually was, especially now that you bring in all these other elements. You have to buy fuel, food, there's all these other things that by the end of the day, when you actually buy whatever you've gone there to buy, would it not have just been better to buy the same thing that's possibly even here,
How about there's
just staying
taxes?
here? And then there's taxes,
If
which
people actually,
hopefully they do.
if they claim.
Hopefully they do actually pay their taxes. But it would have just been, it might have even been cheaper just to buy the same things here. Because even if you consider the shops and the malls that we have here, it's mainly the same stores.
Okay. So maybe it's only really worth it if you're going to shops that aren't in Botswana.
I'm not saying that.
You're not saying
at
he's
all.
not. This is the disclaimer.
I'm not saying that.
He's not saying
I'd
that.
much rather you bought the things here.
Yeah.
Yeah,
So
but
that we can boost our economy.
exactly. Or try and support other brands that might also be locally produced.
Okay. And then this is not only for young professionals, but it's also for young entrepreneurs. How does this exchange rate affect the cost of goods that they're bringing into the country?
Oh, okay, so for your
Like
smaller
somebody who
businesses,
on Facebook people sell Shein products, right? So they import them from, is it China? Yeah. And then they bring them here. And then Badi Rikisa on Facebook Marketplace. How does it affect that?
so the cost also affects them. Just broadly speaking, most, if not all, importers are affected by this. So even those that import from China, for example, I'm sure that transaction will be dollar denominated at some stage. So the changes that were made when you go to market, you've lost a bit of that power that you traditionally used to in terms of the pula's exchange with the dollar. So I'd expect that they would also filter through that higher cost when they do when they do go to Facebook Marketplace, like you say.
Okay. All right.
But I think the way to look at these higher costs as well is like we are just saying, it's an opportunity to offset some of this importing with local production.
Local production.
Exactly. So textile production is something that we've done in the past, and it's something that you can now consider. I think over the last year and a bit, I think we saw also government trying to support the local textile industry. Hey, school uniforms should be produced locally, and obviously the cost was higher at the time it was done, but and then if we do stick with some of these things, at some point, hopefully the cost will also start to come down and start to make sense for local buyers. But
Okay.
yeah,
So if I'm hearing you correctly, I'm not twisting your words.
yeah,
If I'm hearing you correctly, because we can't control what happens with exchange rates, right? We can't control what happens in the economy, etc. One of the ways to mitigate that would be if we not how do I say if we produce locally, maybe if we're able
yeah,
to do some of these things for ourselves, if we were able to shop more Botswana instead of going outside
yeah,
the country for shopping, if we're able to produce some of these items in house.
yeah. Okay, I think with exchange rate to a certain degree we can control it because the pula is a function of two currencies with a rate of call applied to it. So the central bank can control it to some degree. But how the constituent currencies actually behave with with other currencies or how they react to global events, that is not within our control. What we can control to some degree is the price that we see on the shelves, depending on what we produce domestically, to what quantities, to what quality, and also support that we also get from a government standpoint. So I think that we can control to some degree, the price that we actually see on the shelves.
Yeah.
But because we import a lot and there are all these events playing out globally that affect the end value of the pula, we lose that control with what ends up on the shelves.
Is it also a good time to export? If I mean, we can't just rely on diamonds. You see, it's very awkward right now.
Yeah.
Um, Other things, I see that there's copper mines. There's is it magnesium as well?
Manganese.
Manganese.
Yeah.
Oh, English. There's manganese. There's copper. Would it be more beneficial looking at the exchange rates to also export more to other countries?
Definitely. It's an exporter's
Market.
market essentially. So those other commodities, it's definitely good, or we get more bang for our buck exporting those quantities. And I think there is an intention to try and expand the export of some of those commodities along with others. But I think from our standpoint, yeah, we need to look past just exporting raw commodities and trying to export more finished or processed goods.
Okay.
So I think that's where we get or would get more value that would then stay within the country. So, for example, a lot of these companies just export the raw ore and then send it out without any processing. But if you look at even the commodities that you're speaking about, even diamonds, where the most value is down the value chain.
Yeah.
Even with food, you get the most value down the value chain. So we need to do more processing and make sure that we set up industries all along all these value chains
Okay.
to get more value when we eventually do export.
All right. And then this isn't necessarily exporting, but I know a lot of young Botswana, they give their services to people that are not in Botswana. For example, teaching English in China, you can do it online in the comfort of your own home. Gaborone. Um, some people are like virtual assistants. Some people design posters for people in other countries because maybe it's cheaper when Botswana do it. I don't know. But that also, you get affected with the exchange rates, right?
Yeah.
Or do you just say, to design this poster, I'm charging you $2. And then what happens to the dollar doesn't matter, it's still $2. It only affects you when the money comes back into Botswana.
Yeah. But and then, like you say, it would be a positive for them since they're charging or they're pricing it in dollar terms. So because the pula has lost some value when you consider it against the dollar, then they get more pula when they do eventually convert it back into pula. And then I don't know what the tax element would be in that regard.
I don't know. After this, we should have somebody from a tax perspective.
Yeah.
Please reach out and explain to us how all of these things would affect us. Okay, and then lastly, what's one practical way that young Botswana can take advantage? I know we've spoken about maybe starting small businesses, but we can't now start producing textiles today, like small scale things. What can we do to take advantage of the exchange rates?
I mean, producing textiles, yeah, it would be a good start. what I would say that they can do at whatever scale they can and they have ideas on is to try and align as closely as possible to the sectors that keep getting highlighted for growth. And the reason for that is that at different stages or at different levels, I'd expect that there'll be different support measures being put into place to try and grow businesses from one end to another. So tourism, for example, people can, or there's an expectation that going forward, we should be able to participate at different levels, whether it's dam tourism, for example, exploring different cultural sites, heritage sites, or even just self-drive safaris, all these different things. There's an opportunity to play some part without necessarily having to try and own the entire value chain or expect to play along all the different sectors that will come into play. So agriculture, for example, you can choose to be a farmer or come up with some form of processing to get whatever offtake there is from these farmers and convert it into something or add value to it before it then makes its way to the shelves. There's different things you can play with
Okay. No, that makes sense.
depending on what your interests are as well. I think the likelihood for success will be higher if you align them with what your personal interests are.
I like what you're saying about agriculture because a lot of people have farms, but they don't farm commercially,
Yeah.
which is also okay. If you can just farm to make sure that you have enough kolapeng. Some people I know that they sell on the streets and they sell to
Yeah, absolutely.
wholesalers.
Absolutely. And you know, that kind of small scale farming, it can actually gain enough critical momentum to actually have price power. So I have my own backyard. If it's a neighborhood, we can all coordinate how and what we produce and then use that or use our collective bargaining power to get our goods to the shelf at a favorable price to us as well. So that can be done at different stages. Like I say, backyard farming or small scale farmers all banding together in a corporation and then trying to gain some price power in getting that produce to shelves. I think there's need for more coordination maybe amongst
Yeah.
ourselves and with authorities as well to get our stuff out there.
Yeah, I think with entrepreneurs, we need a lot of hand holding,
Yeah.
but we can get further if there are more of us.
Yeah, but some of that hand holding needs to be among us as well. Like we also need to determine what it is or what the output is or where we want to go with whatever we're trying to do.
Okay. And then, sorry, going back a little bit on interest rates. I'm still on the Motheo thing. It's just
Okay.
it's in the back of my head. Um, when a group of people pull together funds, do banks, any bank, do banks have like accounts for that? Like, are those more favorable interest rates than if I just kept the money to myself?
I don't think
I
I
don't
can
know if I'm
answer this
making
one.
sense.
I hear what you're saying, but I honestly don't think I can answer that one.
Okay.
Yeah.
Or rather, let me say that if I save 200 pula every month
Yeah.
and I put it under my bed, it's not accumulating any interest, right? But if I put that 200 pula in the bank,
Yeah.
it's accumulating interest.
It is. Or it should, depending
It did.
on which product you buy. Obviously, if you keep it in your current account, the interest that you earn will be very minimal. So I think if you want to save that 200 pula every month, for example, shop around and see what savings products are available, which one will offer the most interest, and also match it with when you want that money back. So there'll be like fixed deposit accounts, for example, where you put that money in there, you can't touch it for 12 months, and you'll likely earn a higher rate of return on it. But also, I think when you go shopping around for these products, the more money you actually have to put into those accounts, the more bargaining power you have as well,
Okay.
with whatever institution you're facing to try and get a better rate of interest back.
Yeah, maybe it also helps people, like, in terms of managing debt.
Mm.
If I know that I have to pay school fees in January and I save a little bit towards that, because a lot of people are just broke in January.
Yeah.
And then they take out loans, personal loans, and they do all
Yeah.
of that. So maybe that's one of the ways that people can manage debt.
Absolutely. And then I think, like you're saying, if you're using it for something like that, then just fix it. Just know that you can't touch it. And if you have to tap into it, you get charged for tapping into it. So there's a cost for you actually withdrawing a certain amount of funds from a fixed deposit account, for example.
Yeah, but saving money is a bit tough because when people want the money, they want it now.
True, but and then yeah, which is why they've set up these parameters around these accounts. So you have to apply, for example, for to withdraw with a 24 or 2 day lead, for example, to try and deter you from doing it, or to try and have you look at other avenues to try and plug the gap rather than taking the cost from withdrawing these funds from that account.
Yeah.
So it's trying to build like a level of discipline for okay, no, that money it's already gone. If you're saving for school fees, for example, it's done.
Yeah. No, that makes sense. But you can't, there isn't only the option of the banks. You said there's a money market.
Yeah, like
And
money market
what's that?
funds, asset managers take your funds and then invest them in different short-term instruments that have a
Okay.
that have high yields, for example. But
But
then
then they also charge a fee for that.
they also charge a fee.
Because, when you try this Forex thing, it's tricky. Because, I mean, not everybody knows everything about it, but you can make a lot of money and not,
I'm not
you
sure.
can lose a lot of money.
I'm not sure how that forex thing works, to be honest.
Okay.
Um, yeah, I think from what you're describing as forex trading, I think with that, just sticking to what the central bank basically tries to highlight around that. Just stick with approved and authorized FX dealers.
Okay. No,
Yeah,
that makes sense.
because yeah, speculating on the market, I'm sure you can make massive wins, but you can also make massive, massive losses.
Yeah, but not all investments are short term, right?
Not all investments are short term. So the longer term investments, I think some of the safe ones in the market include government bonds, for example. You can buy a 10, 20-year government bond, and you get a coupon every quarter from them. So you get a payout.
It's like dividends.
It's like dividends exactly until the bond matures,
Oh, hectic.
and then you get your principal back. So it's there are a few things you can look at, or you can buy annuities as well from some of the asset managers. Also match to try and match your retirement, for example. So you buy this product and then you try and match it with when you expect to retire, and then you can get
But then
monthly
because
payments back.
that's a longer term, they probably have not better interest rates, but they're different from just regular savings.
They are different from just regular savings, yeah.
Okay, so that at least when we retire, go na le
Now
sengwenyana.
that's somewhere on top of whatever pension you might also be contributing into.
Okay,
So yeah, there's hope.
there's hope because now in these economic times, it's very confusing as to like when the economy changes, how does it affect Botswana?
Yeah. Um, yeah, it is confusing. I think it's a turning point in terms of how it affects Botswana. I think there's so many different ways. I don't think we can cover all the ways here.
Yeah.
But yeah, there are quite a few structural changes happening, and I think the two things you've chosen to speak about here today are some of the key ones that are playing out more immediately. So
Yeah.
interest rates, we're feeling them as and when, for example, inflation changes or commercial banks adjust their prime lending rates. The exchange rate also, we've seen two changes this year because of factors that have affected the FX reserves, but that's also due to more macro structural changes that have been happening within the economy as well. So what we're seeing around mining, the spillover into other non-mining sectors, the fiscus and development, just all these other things that are also being affected by what we're seeing happen globally.
Okay. And then real quick, if we see that the pula is doing well against other currencies, is it a good idea to say the pula is doing well, let's keep some money in rands and then use it at a later stage, or let's keep some money in dollars? Because I know a lot of people do that too.
I think it depends what you mean by the pula is doing well.
Like if the rand to pula, one pula is 15 rand.
But would that be saying the pula is doing well?
Oh, okay. It's the other way around, right?
No, it's not the other way around. Like that would be yeah, a much you get more rands for your pula. But in the current setup where the idea is to try and diversify the economy and try and export more stuff, we need to make sure that our products become as competitive as possible. And part of that is by trying to ensure that from a pricing standpoint, it makes sense to where we're exporting to. And I'd
Okay.
imagine within the region, South Africa might be one of the countries that we look to export to. So having a very strong pula might not necessarily be attractive for consumers in SA. So you'd want the pula to be the other way around,
Oh, the other way around.
to make it, oh no, there's a cheaper product, but it's quality. I should go for this instead of what I'm used to buying.
Okay.
So the pula doing well might not necessarily be, let's just have a stronger pula so that we can import more, because importing so much is part of our problem,
Yeah.
especially when our main export faces challenges. But rather, maybe having an undervalued pula might make our goods more attractive to the external market. So that
Okay.
might be the pula doing well to try and support our growth objectives.
All right. We spoke about a lot of things today.
Sorry.
No, it's not a problem. They're all really important. So if you could just have like key takeaways from interest rates and then key takeaways from exchange rates.
Yeah.
Just to sum it up, just to be like, if you've heard nothing today, this is what we're trying to say.
Okay. Key takeaways from interest rates is the cost of borrowing money, or the rate of return you get on your savings, as you've pointed out. The direction tries to basically get a certain behavior out of the economy. So interest rates being cut, for example, tries to induce spending. Even from a savings standpoint, if interest rates go down, you're not getting as much as you'd expect by parking your money. So the
Yeah.
idea is for you to consume and to spend. If interest rates are going up, the idea is for you to slow down some of that spending, be a bit more defensive, save more. And I think that's what's currently happening now, especially when you look at where interest rates are from a prime standpoint. So the idea is consumption is almost constrained because of what we're seeing happening within the broader economy. From an exchange rate standpoint, obviously adjustments are made to our exchange rate to try and also get a certain behavior out of the economy or to try and support certain sectors.
Yeah.
So I think it feeds into Botswana's, or the changes that we've seen this year so far feed into Botswana's broader export-led growth strategy. So by having the pula lose some value, for example, against the rand as well as other key or hard currencies, is to try and create an environment where what we produce domestically becomes more competitive in the external market.
Yeah. Okay. That makes sense. All right. Thank you so much for joining us today,
Thanks for
for
having me.
unpacking these really big macroeconomic issues to extents that Botswana understand how it affects them and what they are. And thank you for joining us at the Gingerbread Podcast today. Tune in next week for another episode. Thank you. Bye.
Thank you.